You may be wondering, why is the US dollar suddenly surging against all of the major currencies? The greenback is up over 10% against the Japanese yen in just the past month alone. At first glance, that may seem like great news, right? A stronger dollar means more buying power for Americans abroad. But the reality is way more complicated than that. A skyrocketing dollar can create major ripple effects, not just for American businesses and consumers, but for the entire global economy. So what's really behind this dollar rally? And what are the potential downsides that everyone needs to watch for? In this video, we're diving into the 5 key reasons behind the dollar's incredible ascent, from the US economy's outperformance to Trump's recent return to the White House. We'll break down the forces pushing the US dollar higher. And stick around, because we're also looking at the big question that's on every investor and trader's mind, which is just how high could the dollar climb? And could it hit parity with the euro? This could have massive changes for trade, inflation, your own wallet, and of course, trading and investment opportunities. Before we get started, make sure to hit the like button and subscribe if you like videos and market insights like this. Now, let's jump right into it with the first factor. The US economy is absolutely crushing it compared to other parts of the world. The numbers don't lie. Just last quarter, the US economy grew by 2.7% on an annualized basis. Meanwhile, in the Eurozone, it didn't even make it to 1% growth. And check this out. Unemployment in the US is holding near 4%, while Germany is dealing with rates above 6%. That's a huge difference, and this kind of economic strength is what makes the US dollar very attractive to investors worldwide. When they see the US as a safer and faster growing market, they're more likely to put their money into US dollar denominated assets. And every time they do, it fuels demand for the dollar, pushing its value even higher. Now, let's talk about something that's adding even more fuel to the dollar rally: Trump's return to the White House. And with Republicans taking control of both the House and the Senate, his policies have a clear path forward. Trump's previous term saw aggressive economic moves, and analysts are expecting much of the same this time around, if not even more. We're already seeing new tariffs on imports and major corporate tax cuts coming down the pipeline, and markets are responding by snapping up US dollars. Why? Because these kind of policies typically boost domestic spending and economic growth in the short term. And with a Republican-controlled Congress backing him, the likelihood of these policies passing is very high. If companies start moving production back to the US to dodge tariffs, demand for the dollar could skyrocket even further. Investors are basically saying, with Trump back, the dollar is a sure bet. And when markets sense a stronger dollar on the horizon, it often becomes a self-fulfilling prophecy. All right, inflation, Fed policy, and the dollar. With Trump's new tariffs and larger spending plans, we're looking at a potentially higher inflation. And the Federal Reserve is already on high alert. When inflation rises, the Fed typically responds with rate hikes, but that's not the landscape we are in right now. Right now, we're seeing the Federal Reserve possibly delaying rate cuts. These rates are a huge reason why the US dollar is so strong and why US Treasury yields are climbing. The 10-year Treasury yield came close to hitting 4.5%, which has made US bonds a magnet for global investors. This influx is creating a feedback loop where higher yields attract more investments in dollar assets, which in turn keeps pushing the dollar's value up. So to put it simply, we're in a cycle. Trump's economic policies are creating more inflation, which forces the Fed to delay interest rate cuts, which makes the dollar more attractive, and the dollar keeps climbing. Now let's zoom in on one of the biggest factors behind the dollar's surge: US Treasury yields. As we just mentioned, US yields are on the rise, but here's the kicker. The gap between US Treasury bonds and the bond yields from other regions like Europe, Japan, was widening. This makes dollar-denominated assets even more attractive to global investors. Imagine you're an investor in Japan or the Eurozone, where interest rates are practically zero in Japan. The US, with its higher yields, starts to look like a gold mine. So what would you do? You would probably move your money into US bonds, and every dollar you invest actually increases demand for the greenback. This effect is so powerful that analysts at JP Morgan are predicting the dollar index could climb another 7% if this trend holds. That would certainly drive euro below parity with the US dollar, and the US dollar Japanese yen exchange rate well above 160, maybe even 165. And last but definitely not least, the dollar's unique status as a safe haven currency is also playing a big role here. When global markets get shaky, investors look for safety, and there's one currency they trust more than any other, and that's the US dollar. With political turmoil in Europe, economic stagnation in Japan, and ongoing conflicts from Ukraine to the Middle East, investors are increasingly wary of putting their money elsewhere. Germany is facing political uncertainty, Japan's economy is in a gridlock, and they have a minority government, and concerns about global energy supplies and trade routes are at an all-time high. So when things get messy, global investors will flock to the safety of the US dollar. It's considered a safe bet in a time when there aren't a lot of other options that offer the same level of security. But that's not all. Trump's tariffs and trade policies could lead to another round of global trade wars. That was a really hot word back in his first term. If other countries retaliate with their own tariffs, we could see even more uncertainty in the markets, sending even more investors flocking to the dollar as a safe haven. These trade tensions could have ripple effects on economies worldwide, making the dollar even stronger in the short term. So what's the big takeaway? The dollar's meteoric rise is driven by a perfect storm: strong U.S. economic growth, Trump's ambitious policies with full congressional backing, rising treasury yields, and the dollar's safe haven status. And if these factors continue, the dollar could keep climbing, even pushing the euro past parity. Currencies, especially the dollar, are all about momentum. Once the dollar catches a strong uptrend, it can surge far beyond what anyone expects, thanks to speculators jumping on board. As more investors pile in, it creates a snowball effect that could push the rally even higher until something significant comes along to break the streak. And that's usually in the form of a big economic miss or a strong statement from a top policymaker to hit the brakes and turn the trend. But, and this is a big but, a strong dollar isn't all positive. For American exporters, it makes U.S. goods more expensive abroad, squeezing profits for companies that rely on exports. And globally, countries that have debts in U.S. dollars could face further higher repayment costs, creating economic strain in places that are already struggling. And these are consequences of a strong dollar. There's also the risk of intensifying trade tensions if Trump's tariffs escalate into trade wars. These moves could trigger economic pushback and, the worst-case scenario, spark trade conflicts that might impact global markets in many ways that we can't fully predict. So where does that leave us? If you're a currency trader or just watching how the dollar strength could impact your wallet, pay close attention. The dollar's rise reflects more than just economic outperformance. It's a trend with the potential to reshape economies and growth worldwide. If you found this breakdown helpful, don't forget to hit the like button and subscribe for more videos like this. And if you have a view on the US dollar and you want to trade it, check out our recommended brokers and prop firms in the description below. There's some great discounts. Finally, let me know in the comments whether you think the dollar is headed higher and where you think it's headed next. And as always, thank you for watching.